Welcome back. In the red now, and it's now more than 200 points off from the session highs on the Nifty. The Nifty's down close to about 13 points. Sensex down 26 points, so snapping a 6-day winning streak. There was some fatigue which has crept into the markets. The morning was fine the first 1 hour, but since then we've seen profit booking emerging at higher levels. The mid-cap index sell-off is quite steep now. The mid-cap index is down close to about 1.5%, while the small-cap index too is down over 1%, with the advanced decline ratio now standing at about 2 stocks advancing for 7 in the red. The key sectors where we are seeing some amount of profit booking and pressure, they include metals. The Nifty Metal Index is down nearly 1.5%. The oil and gas index, pharma index, realty. These are sectors which did well over the last couple of days in the recovery rally, and today they are retreating. But let's talk about EaseMyTrip. The company has forayed into the charter aviation market. The company has announced a 49% investment in a company called Big Charter Private Limited. Prashant Pitti, co-founder of EaseMyTrip, is now with us on the show. Thank you for joining in. First, if you could tell us, how much are you paying for this 49% stake?
Hi. Firstly, thank you for having me on the show. With respect to the amount and the quantum, that is still to be decided. The board has given us approval to acquire 49% of the stake. We are planning to go ahead with a share swap as a medium to acquire in this company.
Last round, can you give us an indication then? What was the valuation of Big Charter? Some ballpark. I'm sure you don't go into, the board will not give a buy-in, blind. So give us some indication of the amount, the valuation of Big Charter, how much you're willing to invest in it, and what kind of assets, revenues, and margins you would be looking at.
Happy to explain a little bit more about the business. The brand name is basically Fly Big. It has 100 exclusive rights over sectors. 100 sectors, they have exclusive rights where only they can operate. They are pretty much operating in tier 2, tier 3 sectors. These are non-scheduled flights. They have 4 charter airplanes with them. And in the last year, their revenue was 128 crores. EaseMyTrip revenue was somewhere about 600 odd crores. So this is a bigger acquisition done by the company. This will enable EaseMyTrip to basically cater to high net worth individuals, corporate clients, and also people in tier 2, tier 3 geographies who have capability to pay in this high margin business. And to give you some idea, for example, one of the exclusive sectors which they have is from Hindon to Ludhiana. Hindon is basically closer to Noida and eastern part of Delhi. And from Hindon to Ludhiana, only Fly Big can operate under Udan scheme. They have exclusive rights. They have 100 such exclusive rights. And in terms of valuation, it would be a little bit early for me to say. The board and the team is still working on the valuation. And we hope that this will become a very fruitful acquisition for the company.
Prashant, thank you for explaining that. So we understand that the entity that you're looking to acquire a 49% stake in is close to 1/5 of the current size at which you operate at in terms of the top line. What are the margins that they are working on currently? And secondly, assuming all the approvals come in time, when is this particular acquisition expected to consummate?
Well, again, board approval has come in. Now there is a negotiation happening between both the teams, and which is why it is difficult for me to talk about valuation at the moment. However,
no, just the margins of the acquiring business.
So it's a high margin business. Margin can vary anywhere between 10 to 20% business. These are non-scheduled flights. The way Indigo, SpiceJet, Air India operates, this is not the same way. They have 19-seater, 4 aircrafts. All of them are 19-seater, and they operate under Udan scheme, under which government also gives certain portion of revenues for operating in such sectors, which are not run by traditional airlines. So it's a high margin business, and last year the turnover was 128 odd crores, and we are looking forward to fill more of their demands since EaseMyTrip has about 10 lakh people who visit our website on daily basis, and there's a very, very high demand in tier 2, tier 3 cities. We look forward to ensure that they do not see any empty seats and their occupancy rates are high.
So the company that you're looking to acquire, 49% stake, had revenues of 120 crore last year with margins of 10 to 20%, correct? What did it grow at last year? Or if you could give us the 3-year revenue growth rates.
I believe the number which I have is for FY22. At that time, the number was about 60 odd crores. From 60 odd crores, to about 128 odd crores. The numbers have increased in the couple of months.
And is it a way, I mean, what would the capacity utilization be? How much could you scale the revenues up to? And do you have plans to further increase your stake?
So all that is work in progress. It would be very, very difficult for me to, pinpoint and give exact details around it. But yes, we are extremely bullish about this industry. It's an industry which is extremely fast growing and with a very high net margin. It is directly related to EaseMyTrip business as well. As we can basically fulfill their demands even better, and looking forward to grow along with them.
Prashant, just coming back to this particular business, while you have explained the rationale and you've explained the business idea, or the idea behind going ahead with this particular acquisition, number one, why are you doing it outside India? Secondly, why not focus on India itself, given that the market here is quite large? So that is the key question. And secondly, the other question that we constantly get is the absence of any domestic mutual funds as far as the shareholding pattern is concerned. What is being worked on that particular front?
So firstly, Flybig is all India. It's not outside India. They have 100 exclusives within India only. It is not outside India. Yes, we have forayed into opening up markets in Brazil, in Saudi Arabia, in US, and other places. And the rationale behind it is very simple. 3 years ago, we started our operations in Middle East and Dubai, specifically UAE, and our business has grown exponentially from the Middle East area. I believe it is almost about 5% of our total business, grown organically over the period of 3 years, and it is still growing very, very rapidly. So we want to capture the success which we have received from the UAE area to the other parts of the world, which is why we have sold the seeds in Brazil, in US, and in Saudi Arabia, and a couple of other regions as well. EaseMyTrip is doing phenomenally well in terms of its international expansion, and we would want to continue growth on that side.
Prashant, is this your first foray into charter aviation, or you had tried it earlier as well?
So we have another company called as Nuthana Airways, which is basically based out of Gift City. But Nuthana Airways' main focus is basically of buying the charter airways and subleasing it to the others. Their main focus is not to operate. While for this company, their main focus is actually operating the aircraft under the government's UDAN scheme. These are all non-scheduled flights. So this is a very different acquisition in its nature.
Prashant, very quickly, Q4, what has been the trend over there? FY26, what can we anticipate in terms of operational trends?
See, operationally, company, as you would know, that EaseMyTrip is a bootstrap company. I mean, only about last year ago, we raised some capital in the company. Otherwise, the company has grown completely bootstrap, never raised any external capital. So we have been extremely cautious about growing while growing profitably. So in the last couple of years, I believe that we have taken a conservative step of, not putting growth over profitability. The company has continued the profitability streak, and we would like to continue doing so. However, markets right now are well poised for us to continue our growth momentum again. A couple of private players who basically recently forayed into this space again with the newer enthusiasm. They basically burnt a lot of money, and now they are going a little bit quieter. So I believe that for us, the FY26 could look much, much better.
Got that. One final question, since you're making this acquisition via a share swap. Now, the acquired company's revenues were 120 crore. Last year, you ended with 480 crore. So it's about 1/4 in terms of your size. Give us some indication of the valuation of the acquired company, because that will, it's directly going to impact your shareholders who've bought into EaseMyTrip. Your market cap, as we can see right now, is 4,700 crore rupees.
It would be substantially lower than our market cap. Substantially lower than our market cap. Let me put it this way.
Like 1/10? Revenues are 1/4. Would the market cap be commensurate 1/4 of yours, or would it be even lower?
Much, much lower than that. I mean, we are expecting it to be in the ballpark of 1/10 of whatever market cap is. But again, I would not like to be held on to this. This is the number which we are negotiating with. And we believe that this is going to be a very, great deal for the company. Another reason is that the Flybig people, the current promoters, they also understand the value which EaseMyTrip can bring into the company. by bringing lots and lots of new customers which they have not acquired in the past.
Thank you so much, Prashant, for joining us. So an acquisition of a little less than 500 crore is what we are looking at. Well, time now for a short break. We'll get you more on the markets on the other side.